Now let's talk about capital account. What is capital account? Capital account records all international transactions that involve the acquisition of either an asset or a liabilities. So it records the transaction of capital. What is capital? It's the foreign investment. Both Australian investment abroad and foreigners' investment when foreigners are investing in Australia. And these capitals are usually non-market, non-produced, intangible assets like debt forgiveness, copyrights, and trademarks. So, another example could be like an Australian firm's loan from a foreign firm is recorded as a credit. If a foreign firm loans from Australian firm, takes loans from Australian firm, it will be recorded as a credit. When a foreign firm buying shares in Australian company, that means they are putting money in our country, it will be recorded as a debit because we have to return it back. So this capital account has two subparts. One is known as net official government and central bank, and the other one is private sector. Okay, net private sector is made up of private loans to overseas minus the private borrowings from overseas. When we are loaning it, it would be recorded as credit in our private sector, and when we are borrowing from overseas, it will be recorded as debit in the net private sector. Net official government is made up of official government loans to overseas minus the official government's borrowing from overseas. So the size of the capital account depends on the difference between the domestic and overseas interest rate. Why is that? Because we'll be talking about it because it involves with when the interest rate, real interest rate is higher in a domestic country, it will create a lot of capital inflow because our financial asset will be paying higher interest. So it will attract a lot of foreign capital, and that will have impact on our exchange rate, on the dollar value. Because to buy our financial asset, to invest in our country, the foreigners will be demanding more of our currencies, and that will increase the price of our currencies. So this is an example of balance of payment in current account and capital account in 2011 and 12, and we can see that balance on trade in goods was in surplus, whereas the balance on trade in services were in deficit. So was a large deficit in the investment income balance. So current account balance, it was in deficit of $42,396 million. And in the capital account, we can see the net capital transfer was $1,100 million. So capital account balance were also in negative, whereas we'll see that will be covered by the financial account surplus. So, capital account of a country also records the foreign investment in the country minus the country's investment. And also all accounts may have some statistical discrepancy that arises from errors and omission when recording those figures. And every country has its official settlement account which records the change in the country's official reserve. And these official reserves are the government's holding of foreign currency. When a country's official reserve increase, the official settlement account will be in negative. Financial account, which is a part of capital account, which is consisting of direct investment, record of direct investment, portfolio investment, financial derivatives, and other investment flow, and also change to reserve asset. So this part of financial account, or this part of the capital account, which is also known as financial account, which records the direct and portfolio investment, as I already mentioned, plus changes in the reserve bank's holding of foreign exchange and gold. So our balance of payment, which is equals to the current account plus the capital account plus financial account, and that should be equals to 0. So just before, you can see that net capital transfer plus the net acquisition of disposal of non-produced, non-financial asset, these two gives the balance in the current capital account. And the foreign investment debit in Australia is the credit, and foreign investment abroad is the debit, gives us the balance in the financial account. And this balance on capital account plus the financial account will give us the balance on capital and financial account. And this is 2011-2012 financial account, Australian economy's financial account, where we can see that net direct investment was $49,644 million, whereas net financial derivatives, we had some negative figures, and at the end, our total financial account balance was $42,766 million.